Welcome back to Market Day Report. I'm Marlon Bowling with you here on a very active Monday morning. Thanks for joining us. Well, as we take a look at this grain market, let's go ahead and start with the corn quotes. We'll see what they're doing right now. The quotes are provided by Bar Chart. Okay, on the big board on the corn, we currently have March now down 8. Oh my goodness, that's painful to read. It was down a penny overnight, and now we're down 8 cents at 4.52 3/4. Just one tick from our low of the opening range today. We have the December new crop down 6 3/4 at 4.87 1/4. Wow, that's 8 cents off of its overnight high. Okay, let's brace yourself. Let's go to soybeans. On soybean trade, you have the March contract down 16 cents. We're at 12.40 1/4 after a high last night of 12.61. And boy, it's claimed about 21 cents off of that now. And November new crop soybeans. Boy, when we came on the air this morning, it was close to taking out the $12 benchmark. We thought we might see an 11 handle. Well, it actually just opened there right after the open. We're now at 11.96 1/4, down 12 1/4 cents. Look at that waterfall pattern on the end of that chart on November soybeans. That thing is just kind of cratering here in the last 6 weeks or so. Well, let's go ahead and look at the wheat and face up the music here. Let's see what's going on. On Chicago on March, we're down 19.5 cents at 5.96 1/2. We just blew out the $6 benchmark. Blew it out. July now down 19 cents at 6.16 per bushel. That's only a penny from our low of the day and 19 cents off of our overnight high. March Kansas City wheat dropping 18 cents. We're at 6.10 per bushel, only 2 ticks from our low of the day. 19 cents, almost 20 cents off of our overnight high. And if you look at July, we're down 16 3/4 at 6.18 1/2 right now. March Minneapolis wheat dropping a dime at 7.02. We had been as high as 7.13 in the overnight trade. Cotton market, well, we have the March contract down 51 points there. We're at 79.68 per pound. So, wow, it's a clean sweep of negative pressure across the crop markets. Crude oil, look at West Texas Intermediate crude. What's going on here? February down $3.28 at 70.51 per barrel. Now it's down 3.30. Had a high of 73.95 overnight. Wow, they took off $3.40 some cents off of that. That's quite a change from last night's trade. And the U.S. dollar index right now, we have the March futures down 164 points. We're at 101.965. I haven't seen a plus sign anywhere yet on the nearby contracts. I want to bring in Chris Swift in studio with us this morning. He's with Swift Trading in Nashville. Thanks for bringing in all the bad news this morning.
You're just more than welcome.
Goodness sakes, it's like you have a little gray cloud over you this morning.
Hopefully not.
What's going on anyway?
Well, you know, I kind of had to change a little bit of my aspect from a couple of weeks ago. A lot of talk about recession had come about, and I kept looking at that, and last week's numbers didn't show anything recession-wise. The Red Book sales were higher, the employment was higher, so I kind of had to come back to a different thought, and maybe this is just commodity deflation. And we can have deflation without having necessarily a recession out there. We have lots of soybeans out there now that we have been able to take some of the pressure off from the rains that we've got in South America. We know that we've got a lot of corn here in the United States to have to chew through. So those particular factors right now are just something that is keeping a little bit of pressure on the market. And we know that farmers haven't sold a lot of grain either. Now we're back into a full carry charge, and we saw December corn go off the board at 4.56 3/4, and looks like March is fixing to do the same, and then we can expect May and the rest to lose that carry as we come forward in time.
And here I thought maybe the market would go flat ahead of the WASDE report.
No,
Not so.
I think the WASDE report is going to show us that we've got plenty of grain. I think that's what it is. And now that you've got some of the pressure relieved off South America, we've got bean meal trading back down $368 a ton. So that's well off almost nearly a $500 where we were a couple of months ago. So we clicked over into the new year, and it just looks like some deflation right now.
Deflation.
Deflation.
The word of the day there. All right, we'll come back in a moment and we'll see if the cattle are deflating today. Probably not, but we'll take a look in just a moment. Okay, we're back talking with Chris Swift of Swift Trading, and now we're going to focus on livestock. And I'll be real honest with you, the cattle market started out pretty firm this morning. A lot going on in the plains. A lot of windy weather, a lot of snowy weather, a lot of wet weather, and let's take a look at what they're doing right now. Let's go to live cattle. Okay, Chris, we have February live cattle $2.35 higher at $172.92. April live cattle gaining $2 right now at $175.42, make it $2.02 higher now. And all the deferreds beyond that month are all way over $1 higher, but not as much as the nearby. So that would seem, correct me if I'm wrong, seem to indicate maybe bull spreading taking place in the market today, right?
Yes.
Okay, so that one so far so good. How about the feeders? Let's take a look at feeders. On the feeder cattle trade, March is now $3.40 higher. It's really getting some momentum here. 227.55 is the last trade. That's just a dime from our high of the opening range. April feeders now up 3.15 at 232.92. And ditto the comments on the live cattle. The nearbys are showing more strength than what the deferred contracts are. The deferreds are all over $2 higher. Now on lean hogs, even they're higher. We have February up 37 cents. It's nothing like the cattle, but hey, we're higher. 37 higher at 70.37 now, and the April contract 52 higher at 76.90. The smallest mover would be May. It was unchanged. Now it's 15 cents higher at 83.30. So there you go. A strong market so far. The cattle market getting a lot of attention today, and rightfully so, I guess, with the hardship out there in the plains. Southern plains may be kind of dodging a bullet on this winter storm, but boy, the central plains, my word.
Yeah, they're going to get a lot of snow out there.
Yeah.
And January is the time of the year for movement. So it's second only to the month of July in volume of sales of stockers and feeder cattle. So the stockers, everybody's getting ready to have some spring grass pasture out there, coming off of wheat possibly, and then going on to that. And then too, for our heavier animals, they're going on feed because the month of January, we start placing cattle for our summer beef. So there's going to be more activity on there, and the snowstorm probably just got us a good boost start to it this morning.
Okay, so if that's the case, what does that typically do when you have a severe winter storm like this? What does that do to packer operations, and how do they have to change to work around something?
Well,
like
it depends on how deep the snow is. If it's just impacting the animals themselves, then that's something. But if it's impacting the roadways where they can't get them loaded on the trucks and take it to it, then they just gain more weight. A lot of times they just say, we're not going to kill on this day, or we're going to have an abbreviated slaughter pace to it. And so they'll call and say, just don't bring them in. And even those trucks that are on the way that may be in, they've got places for them to be able to stay until they can get them processed. But what they'll clearly do is just say, don't bring those trucks in right now. We're going to have an abbreviated session of some kind.
You think the hog futures are riding on the coattails of cattle today, or what?
It's hard to say. You know, they had they set new contract lows last week and then rallied sharply off of that by week's end. So I really don't know. I think it's just volatile. There's a big wide basis spread in the back end to it and kind of converging on the front end. But I don't think a great deal is taking place in the hog market right now.
Quick question. Do you think cash cattle will be higher this week?
I think they probably will be. It looks like we got really good demand. The packer was pretty short bought coming into the first of the year, and they bid up in some regionals last week up to 175. So, yeah, got a good firm tone under it this morning, get some cattle slaughtered, and then it might slow down a little bit. But I think the next couple of weeks should see a lot of activity in the cattle market.
I can see it now. The headlines a week from now, mud on the cattle heading for the packing plant. All right, thanks. Chris Swift with us. He's with Swift Trading right here in Nashville. Suzanne, back to you.